Yo, what's going on, guys? Welcome back to another video. TraqFX here. Just doing a quick little video on opening your eyes from retail trading to smart money trading. Like we all know, smart money trading and retail trading, there's a big difference, but there's also a big misconception. A lot of people who trade retail don't really know what smart money trading is or how we implement it and what's the main differences. So I'm just here to quickly show you guys a quick in-depth example of retail trading, of how it can work and how it can't work, and how smart money can give you that extra edge in the market of letting you buy, or not buy, but letting you guys operate in better opportunities. So with retail trading, we all know that whenever the market is consolidating, we buy at support, sell at resistance. And I'm not saying retail trading doesn't work, because I know a lot of retail traders that I talk to who make more money than me in the market, right? They're more consistent. They tend to make a lot of money. So retail trading completely works. I'm not here to say that it doesn't work. And what I mean by retail trading is I mean by retail strategies such as support, resistance, double bottoms, double tops. Right? We're known to buy these. We're known to sell these double tops, and then buy these double bottoms. Buy the double bottom, sell the double top, etc. And yeah, like smart money, it has a main difference between smart money and retail trading is that smart money trading allows you to have better risk to reward, and it also gives you the opportunity to look at the markets from a completely different lens. So I'll show you guys a good example. So let's say the market is going up right now, right? So just look at this, the big up move. Just focus on this big, huge, impulsive move right here, right? And then after it goes up, we see a lot of like movement, stuff like this happen, right? A lot of stuff like this happen, just basically a bunch of consolidation. Like we're all used to seeing this stuff happening. To the retail trader, you might see a level of resistance right here. Oh, by the way, before I get into this example, I just want to say smart money trading is also retail trading. Soon, smart money won't work anymore. I'm not here to scare anyone, but soon it won't work anymore, and order blocks, breaker blocks, all these concepts are gonna turn into retail concepts. The reason we call it retail trading is because it's so used. Every single person knows these concepts and everyone trades them to the point that like it's not useful anymore, right? But when it comes to smart money trading, not many people know how to completely properly implement it. So yeah, that's the main difference and why I call it retail trading. But smart money is also just another retail trading style, but it's just a style that not many people know how to completely use. So yeah, so over here people see this as resistance. Smart money, or sorry, retail traders, they decide to take sells because we're told to buy at multiple levels of support that are tested multiple times, and told to sell at levels that are tested multiple times. The more stronger the level is tested, the more times the level is tested, the stronger it gets. And then you see something like this happen. So let's say I was to add a sell position right over here. Just remember that a million people are, not even million, trillions of people are looking to sell over here. Right? You're not the only one seeing this level of resistance. Trillions of people are seeing this. And then trillions of people add on sell positions, and then boom. Let's say your TP is over here, stop loss above here. Boom. You can see right over here, this move up stops all those people out. So then people start asking, okay, how do I actually, what are smart money traders doing? All right, if the retail traders are losing, what are the smart money traders doing? Well, the smart money traders, they're actually waiting for the retail traders to get stopped out. So I'll show you guys what I mean by that. So by the retail traders who got stopped out over here, smart money waited. We didn't enter right away. We waited, and what do we see? Once the market went up and stopped people out. Remember, this is the liquidity grab. We can consider this as our LQ grab right here. This blue, like this 30. Yeah, so this is the liquidity grab. I'll mark this up as well. LQ grab. Right. So this is LQ grab, where the market went up, pushed up, and stopped out all these people who were selling. Now, once we stopped out all these people that were selling, we can see that you have this little uptrend happening, right? This higher high. So we have a high, or we have a low, we have a high, we have a higher low, and then once again we have a higher high. So you can see a small little uptrend forming right here. Now, once the market grabbed liquidity, we can say that from here the market pushed down and we broke structure right here. So I'll give you guys a good example of breaks of structure. Imagine imagine a game. For example, Call of Duty. Everyone knows that game, right? Let's say Call of Duty first it releases, it's really expensive, and then it has a small little time where it gets really cheap, and then once again it gets really expensive, and then small little time where it's cheap. really expensive, cheap. So for the females that are watching, I guess you can say, some makeups, some makeup. So let's say the makeup over here, it first comes out, it's really expensive. And then after a few months, it has this time where it just gets really, really cheap. It goes down, prices goes down. And then after 2 to 3 months, it goes up again. And then after 2 months, it goes down, and after 2 months, it goes up. Now imagine one day, randomly, it does something like this, where it goes up, but then boom, price just completely falls. In your head, you're thinking, wow, like, now obviously, like, in your head, you weren't expecting this, right? Like, wow, price just completely fell off. I can't believe that. Now, I'll try to, connect this to where I'm, alright. Sorry, I'll try to connect what I'm saying into institutional trading. So now we see the price is going up. The market is pretty bullish, and you're expecting the price to go up again and do this, right? That's what we all expect. But what actually ends up happening is the market goes up, and then boom, you see the market completely tanks. So in that area that the market tanked in, what we want to do is we want to look towards the left and see if it broke any significant structure. So right here we can see that the market broke structure here of a previous higher low here, and not here, but yeah. And by the way, for the people that are a little confused of what I mean by a break of a previous higher low, this is what I mean. The market is bullish, right? It creates low, and then it creates a high, and it creates a higher low, and then it creates a higher high, and then once again creates a higher low, and then once again creates a higher high, higher low, higher high. Now we just broke past the higher low. Price closed below a previous higher low. Now some people, they don't actually understand what this means. They just trade it. What I want everyone to do is I want them to understand what this actually means. This break of structure means that price is getting ready to sell off now, because it's violating previous uptrend structure and now it's creating downtrend structure. This means that the pattern of higher highs, higher lows is slowly going to be switching to lower lows, lower highs. So that's what a BOS is, right? And that's what happened right here. The market came to this point of time right over here. Let me mark this up. Right over here, when the market first tapped into it, you can see that the market completely fell off and it broke structure towards the left. Now after it breaks structure towards the left, our area of interest now is going to be that move that was the cause of this BOS. So for example, this is so theoretical, so I don't want to hear anyone saying, oh, like, use this on a live chart. I'll show you guys examples on the live charts, no problem. But I want just so everyone knows that this is just theoretical. So price creates this high point and then it sells off. Now once it sells off, you see that we broke structure of this higher low right here. This means that banks and institutions found interest in this level because now we're breaking structure, right? So let's say this is our area of interest. Price is gonna now come into our area of interest. Let's act like this never happened. So this is our area of interest now. Assume that there's an order block inside of this move down that broke structure. What we're going to be doing now is we're waiting for price to come back into this area of interest. And when it does do that, obviously you can see price taps into this area perfectly. This is just random. I'll do it from here, whatever. Assume stop loss is right here, and then take profit would just be the next low. So this is where smart money traders are getting in. This is a clean 6-to-1. Price taps into area of interest and falls down. Now this can be seen as supply and demand, order blocks, whatever you want to call it. It doesn't matter at all. Just call it whatever you want. I don't care. Just try to understand how we're seeing the market. So now let's see what the market does. So once it sells off and smart money traders get their take profit get hit, what are they doing now? Well, obviously this is no longer in a valid area of interest, right? This previous supply zone is not valid anymore because it's already been tested. So what we're going to be doing now is we're actually going to be looking for the next untested demand zone. So for example, right here, people might say, all right, isn't this an untested demand zone? Technically you could say it was, but look over here. This untested demand was simply retesting this area right over here. So this demand zone is tested, we can't use it anymore, right? And now retail traders might be looking at this as a good opportunity to buy at support. And what that's going to do is it's going to create a bunch of liquidity at the lows, right? Like we all know, liquidity is basically major areas in the market where retail traders, it's basically a level that's been seen by so many people that it's no longer actually strong or valid. And by the way, I hate it when people say it doesn't work, because it still works. I can show you guys a million examples where support resistance trading works, but you just have to create rules that are basically in your favor, or you have to design it in a specific way where it adapts to the market conditions, because not every single support is going to work. So you obviously have to create rules. So maybe, okay, instead of buying every single support, I'll buy a support that's only been tested once or twice. That's just a good example. So obviously this is seen as liquidity. If we look a little bit towards the left, we're gonna see the major impulsive move right here. And boom. So this is that major impulsive move right over here, untested demand that the market created before it went up, right? So one thing that I want you guys to notice, look at this area, notice these areas, okay? Now I'm gonna draw this in a way where it's so much easier to understand. Market goes up, comes down, consolidates, boom. Oh, my bad. Yeah, I need to create more space, one sec. And then boom, right over here. So what do you notice in this picture right here? You can see that the market went up, consolidated, and came back down and went up. Now if I were to completely block this out, if I was to completely block out this price action right here, what would you see? All you would see is price created a big impulsive move up once, went down, and then mirrored that same exact move, right? And now let's look at that same example that I just showed you guys over here. Let's ignore all this right over here, right? And then let's also ignore all this over here. So ignore all this. All we're gonna do is we're gonna be simply focusing on that big move in the market. So let's also ignore all of this over here. Completely ignore all this price action over here. We're ignoring and blanking every other trade out or price action out. Now we have our untested level of demand, and you want to ask yourself, okay, one, is there volume in this? Meaning, is there a lot of momentum? Two, was there any demand zones, meaning order blocks or whatever you want to call them? Three, did this move break structure? For example, if the market was pretty bearish before, and then once it came into this level, was this responsible for any breaks of structure? And right over here, you can see that, boom, we have a break of structure here, a break of structure here. So if you have all these confirmations met up, what you want to do is focus simply on that big demand or that big impulsive move that was the cause of all this. And then once price makes its way back down towards your demand zone, you're gonna see that same exact push up. Now I know a lot of people are gonna say, oh, you're being theoretical. You haven't really used this on a live chart example or whatever. I'll be showing you guys an example where I actually implemented this live trade that I took. I sent it out to my free Telegram group as well. For the people that are not in there, make sure you get in there. There's a lot of nice trading opportunities that I do take. I do lose, by the way. I'm not here trying to hide saying that I'm a secret market maker. I definitely lose a lot, but I have that, that urge in the market where I know when to call my losses out, know when to hold my winners. An example. So blah blah blah. This is just a theoretical example. Let's get to the real live charts. So right over here, right, you guys see that I showed this in a previous example or previous video actually. But right over here, let me show you guys the before anyone starts screaming at me. So yeah, this is the before. You can see April 23rd, 2021, 04:28. That was the time. Yeah, so this is the before, right? No replay mode, all the before, and this is the after. So let me just go on a random chart, right? I'll delete all of this right here, and let's actually analyze what the market did. So once again, like the concept I showed you before, let's ignore every single thing and only focus on this big move. So first I'm going to ask myself, look towards the left. Did this move up here break any structure? Yes, it did. It broke, it created this lower high, lower low, right? Lower high, lower low, and we can say that right here we broke structure, and right over here we broke structure. So that's all the information I need now. From here, what I'm going to do is I'm going to completely ignore all this, okay, my bad. Santa bring to front. So I'm going to completely ignore all this price action over here, and all I'm going to do is I'm going to be focusing on the demand zone that's inside of my impulsive move here. So that's what I'm going to do. I'm going to highlight this demand zone. Actually, let me just use this horizontal ray. So I already made a video on how to mark up your supply and demand zones. Watch that if anyone hasn't. Let's make this go up right here. So this is my area of interest, and now I'm just going to wait for price to get there. Now what this does is it actually helps you not get too psychologically emotional when it comes to your trade. For example, like while we're ignoring all this price action over here, we're just waiting for price to come into our POI. Everyone else is looking at this, move down and thinking, okay, this is a great time to sell, right? And for example, if I just completely move this right here and we look at this move down, we're thinking, wow, this is a great time price to come into my area of interest. But then if you play the next few candles out, you're like, what? You're like, what? You know, you're pissed off, you're shitting bricks. You know, you're pretty mad. The market is moving up now, and you're like, oh, it even gave me a break of structure right here. Like, oh my god, is the market gonna come back down? And then you start looking at buys here, and things get confusing. So what I like to do is I like to simply ignore all of this, right? I ignore all of this, and then I set a alert, you know, right over here at my area of interest. And when it comes there, I'll be looking for my schematic of if I should buy or not, right? So let's just play this out, and then boom, right here you can see the market came in and tapped me in. So then at this point, you know, my entry gets filled, right? And look, so this is 149,273. This was I can't even, is that 149,209? So let me make this even a little bit more accurate. I refined that area of interest where I bought at by this demand zone right here. So 149,202, 149,209, basically the same, you know, same thing. Couple pips different, but whatever. Likewise, same thing. So we basically get our entry filled right over here, and then stop loss was somewhere over here, not too sure. And take profit was obviously at the next high for 402 pips, right? When you see TP was just over there. So now once my entry is triggered in, at this point, what I would do is I would, you know, like I said, ignore the price action towards the left. And what I would do is I would just simply monitor my trade and look at the price action and what the market is doing now. So a few things that I look for when the market is going my way is I look for price to completely, you know, quickly move towards my way. I don't want to see price consolidate or do any, you know, higher time frame BS. Like for example, if the higher time frame was doing this, I probably wouldn't like that, right? I'd probably get out. But if the market is gonna go quickly, you know, trigger in my area of interest, and then from there completely just go up, then I'm gonna be pretty confident in my trade. So let's play this out, not play this out. As it is Ramadan, by the way, so happy Ramadan to all my brothers and sisters that are participating. You know, I hope God blesses you guys all. Pretty random, yeah. But then yeah, as you can see, price completely goes up, and I wasn't too worried about, well, what if it doesn't go my way, or what if this happens, what if that happens, right? And at this point, TP got destroyed, holy. But yeah, at this point right over here, in my head I'm thinking, okay, all the market is doing is it's creating money at the highs, right? Equal highs. All we're doing is creating money at the highs. Because remember what I told you, as smart money traders, we're already in at the lows. Retail traders, they're saying, oh, this is a good time to look for sells now, right? So they're stacking up on sells. And look, this is a perfect example of where retail trading works. I hate it when people say it doesn't work, because it does work. Right here, there's a level of resistance, and you can see the this move went down, and it was also responsible for this BOS right here. Sorry, COS, yeah. I just like the color of this more. So this is responsible for this previous higher low that was broken right over here, right? So once that higher low was broken, like I said, now this is a valid area of interest where we would consider institutions and banks that would be paying interest in. So at this point, let me actually go and replay more. I didn't take this sell, by the way. I'm just showing you guys where retail trading does work, right? We just see it from a different way. So at this point, we could just completely highlight this area of resistance, say, oh, this is a good time to sell. Next time the market comes here, I'll take a decent sell, and this is untested as well, so boom. So whenever price comes back into area of interest, take your sell, stop loss at the high, TP at the next low, right, 110. And then, obviously this is like hindsight. It doesn't even go my way, let me see. I don't even think I remember. Alright, so in this case it didn't. It did go our way for about like 79, 80 pips, but then it ends up reversing. But this is where taking stuff like partials and, you know, partials, moving your stop loss to break even is important. But yeah, so retail trading still works. You just have to create rules where it's designed to fit your trading style. So as you can see, this was an amazing, like, let me go to my actual chart. This was an amazing 419 pip TP, right? And people say, okay, why don't you catch these big moves towards the downside? Why do you only trade with the trend? Well, like I said before, I like to wait for trades long term. I don't like to go against the trend because you tend to get really risky with it. Your stop loss gets a little hit a lot. It's just like paintball, you know, your stop loss getting hit there, hitting everywhere. So it's better to just stick with your overall trend, follow your rules. You know, my rules and your rules won't be the same, so follow your own rules. And at the end of the day, like, you know, just whatever works for you works for you. And if it doesn't work for me, or if something I do doesn't work for you, then that's completely fine. You don't have to follow me. That's one mistake I was doing a lot. I was following people, trying to trade like them and not trying to trade my own way. But yeah, like, just trade by yourself, find out what works for you, and literally backtest that for decades. Backtest it, backtest it, backtest it, understand it, and yeah. So that was a quick little. Oh yeah. So let me. My bad. Before I end this video, I just wanted to say So what the main summary of this video is just to show that retail trading versus smart money trading, we're getting in for these big moves, right? Notice how this is the big move in the market. We waited for price to come back into this big move, and it did the same thing. While retail traders were worried about all this noise over here, we weren't. We were focusing on the bigger picture, because the bigger picture is always much more superior than the smaller picture. If you're in a, for example, maybe let me think of a good example. Okay, let's say this. Let's say you're in a friend group, right? And short term, you know, they're not the best type of people. You have, you know, you have fun with them, but you tend to get in a lot of trouble with them. You waste a lot of time as well, and they're just not the best of people. But you tend to have fun with them for the short term. But if you think about it long term, is there more negatives than positive? Or is there more positive than negatives? And in this case, I'm noticing that in the styles of trading resistance, you can see that there's so much more negatives in it than positives compared to retail trading. I'll show you guys another example right here, right? So right here, we have equal highs forming the market. Equal high meaning a level of resistance. That's actually really ugly. I'm so sorry for that. But yeah, right here, you can see that people are selling right here. Test the resistance, test the resistance, test the resistance, test the resistance. Market goes up, stops those traders out. Now right over here, test of support, test of support, test of support. Market goes down and stops them out. So it's really manipulative, and your stop loss is just gonna be so big when it comes to retail trading. But you could, that doesn't mean that you can't use it. It just means that you're gonna have to tweak it a bit. So that's a quick little video on shit, I forgot the video. Oh yeah. Sorry. So that's a quick little video on retail trading versus smart money trading, and that little tip I gave you guys about the, you know, the tool where you highlight all the other price action, try to ignore it. And yeah, I hope you guys all have a good day. Trade safe. Market just opened. Hope everyone has a good week, and take care.